Hello, everyone, and welcome to today's show. My name is Jacob Jennings with Balustrade Real Estate, and I'm joined today with the amazing Tony Aquaviva with Aquaviva. Let's start. We can edit this.
That's right, though. Aquaviva's right.
Why did I think it was Aquavita?
No, Aquaviva is correct.
Well, then I wasn't wrong, so we don't have to edit that. Take it back. So I can do that in the background. So I'm joined today with Tony Aquaviva with Premier Lending, who is brilliant as well as handsome. How you doing there, my friend?
Excellent. Thank you, Jacob.
Thank you for joining us today.
Delighted to be here.
So I wanted to have you on the show today to talk about the Florida program called Hometown Heroes. Can you give everyone listening the understanding, just in a broad scope, of what is Hometown Heroes?
Well, sure. Florida has created an initiative to put people into homes who might not otherwise have had an opportunity, or at least give them a step up. And its design is geared toward occupations that are members of the community or helpful members of the community. For example, Department of Corrections, Department of Justice, Department of Health, dentistry, chiropractic, fitness, nursing, massage, veterinary. So it covers a lot of different arenas, but in theory, it is people who are giving back to their communities. The program is designed to give people up to $25,000 to help them with a down payment and or closing costs. As of July, that number will be increased to $35,000. The governor has increased the number from 25 to 35, and I believe he has added a few $100 million to the program. So it should have eligibility for many people for quite some time to come.
I think that's incredible because our housing market in Florida is so hot. We are the fastest growing state in the country. And the people who deserve to, well, so many people who do so many good things for our society to keep us running have been outpriced in the past and they couldn't get into the housing market. But this actually gives them a chance to actually afford a home and to get into the wealth creation that is real estate and home ownership. It's amazing.
No question. Absolutely.
So tell me a little bit more about the program. It's offered through several financing options, but what are those options? Is it limited to one type of financing? What are the different programs that are offered for financing with Hometown?
Well, there are three options. There is the FHA option, which is the most convenient because it is the least required in down payment. The FHA requires a 3.5% down payment. Whereas if you go with either of the two conventional options, which are both Fannie Mae and Freddie Mac, and they actually have different names. It's the Florida's First Heroes is the government option, which would be FHA, VA, USDA. And then there's Fannie Mae, which they're calling the HFA Preferred Heroes program. And then Freddie Mac is calling it the FLHFA Advantage Heroes program. So each agency has created its own name, but in theory, they all function the same. The benefits to the program are you get a reduced mortgage insurance premium, which is what is required if you're not putting 20% or greater down. But more important, you have to meet the 80% of the median income in the area in which you're purchasing to have some of these benefits applied to the program for you. So it is very specific and relative to where you're purchasing, and it goes specifically to zip code.
To zip code. Mm-hmm. So if I were buying a home in Tallahassee, it's going to be different than if I was buying a home down in Broward County.
That's
and even
correct.
More so to the zip code.
That is correct. Each county has a specific median income that it posts, and then it can become more specific within the zip code of the county. So yes is the answer.
Now, so why is that? Why is it narrowed down to the zip codes? Why is it so?
Well, they want the affordable housing for the people to be specific to the area they're buying. So that's the premise of it. 80% of the median income should enable people of moderate incomes to purchase homes in that area, as opposed to somebody moving into the area and utilizing the program because they have greater affluence. It's designed to put people in homes who might not otherwise have the luxury or opportunity to get into the homes.
I can see that. So you were talking about mortgage insurance briefly a second ago. So the PMI that usually accompanies
Right.
FHA loans, that is, can you speak about how that affects again?
Oh, sure. So a loan that doesn't have 20% or greater in down payment applied to the mortgage is required to have mortgage insurance. And mortgage insurance is at times costly because it is specifically subject to your credit score. So this
Okay.
program requires that you have certain minimum credit score requirements.
Such
So
as,
that's probably something we should address because it ties directly into this specific issue. But if you have a credit score of 640 to 679, the ratio requirements, which simply means your debt ratio, cannot exceed 45%. But if you have a 680 FICO score or greater, then you fall into a better category. So they're going to make the mortgage insurance more attractive based upon the category you fall into, assuming you meet the 80% median income in the area which you're choosing to purchase.
so let's say the average income in, well, I'm going to use real easy numbers. I was a dancer before I was in real estate, so I like things that work really well. So let's say the average income in the zip code that we're talking about is $100,000.
Mm-hmm.
That means 80% would be $80,000.
That is
So if
correct.
someone is making $80,000 for doing this correctly, they
Mm-hmm.
would then qualify for up to, in July, $35,000 towards down payment assistance of their first home. Are we correct?
If they meet those requirements and the zip code, remember, there's going to be an income amount that's going to be given to you specifically to that. So yes, if the zip code you've selected says that the median income is 100,000, 80% would be 80,000. And that is the income that we will use to qualify you. And then you have to meet all the traditional standards related to your debt ratio, your credit score requirements, etc.
So they would get these funds, but this is not a grant. This is a loan, correct?
Well, that is correct. It is not a grant, and it does have to be paid back. It is important that you recognize the money has to be paid back. If you live in the house for 20 years and then choose to sell it, your money has to be paid back then.
But that's just like any other second position loan, like a
In
HELOC.
theory, correct. In theory,
That's not.
yes. And if
So,
you pay the loan off early, if you do anything related to relinquishing yourself of the loan, you then are obligated to pay back the money.
what's the interest rate for this program?
That's great because it is specific to the type of program you use, but the rates vary from 6 1/8 to 7 1/8 based upon what category you fall in. The joy or the benefit of that is it is more attractive than the current rates, and those will move and fluctuate based upon what the market does.
Okay. So if someone has an FHA loan where they put down 3.5%, or they would have to put down 3.5%,
Mm-hmm.
and they then take out they're eligible for the program for Hometown Heroes.
Yes.
So they are literally able to get into these homes with none of really completely financed. How does this affect their net worth?
Well, let's cover two specific issues first. Number one, it has to be an owner-occupied property. You
So
should
not
know
an investment property,
not
not
be
like
an investment nor a second home. So the objective is to put people in homes, and it can be structured such that we let you know this is the maximum debt ratio you're eligible for. You're going to need to make certain that you pay off these debts or do what you need to do in order to make certain that you meet the requirements. And that will enable you to be approved to be put into that home under this program. And it will go on your credit report as any other loan would be. It will give you the benefits of the credit rating that you're looking for, with the assumption you make your payments in a timely manner. But it should have no detriment to your other abilities so long as you qualify for the mortgage.
So can you use this as a different program by chance?
You cannot use this. You can use it with other potential grant programs,
Mhm.
Like there's an MCC program, which is a tax benefit program. You can use it with that, but it cannot be associated with other programs of this nature. It has to be a different type of program, like a grant program that doesn't necessarily have to be paid back.
What is the MCC grant program?
The MCC is specific to certain zip codes in Florida, South Florida specifically, and it gives you a benefit on your taxes where you get tax money back if it's
Ooh.
utilized. It's complex, but it is available.
Okay, that sounds interesting.
Mm-hmm.
So, but I'll say that for another show. So y'all stay tuned. Come back and find out from more. So tell
Yes.
us, now, do you have to have a cosigner to get one of these?
It's not necessary that you have to have a cosigner, but you are able to have a cosigner on these programs. So you can have somebody help you. But remember, you still have interests and concerns specific to your median income and your requirements. But for example, if you and I are a couple and we're married,
I thought you
and
never
I
asked.
am the one purchasing the home, I don't have to use our household income and include yours to qualify. So that's actually an advantage.
That's very, and why is that?
Well, many of the grant programs require that you use household income.
Mhm.
And that often can put you out of the bracket if two of you are somewhat high enough wage earners not to meet the median income requirement. But if one of you does and you can qualify, you can just go with the person who qualifies. So I think that's a benefit to this program, quite honestly.
That's really very fascinating. I wonder if can we do a little case study real quick?
Sure.
Let's say, because we keep talking about qualifications and how you qualify for these programs. Let's say that they are in Broward County, for example, which is in Southeast Florida, for those of you who don't know. It's in the Fort Lauderdale area. What if, how would we find out what they would qualify for in zip code, say, 33308?
Well, we'd have to pull up the chart. We
Okay.
the lenders are given a chart,
Okay.
and it gets deeper than that. The chart then brings us to the reference number, which brings us to a specific number. It's almost like a little square box of that area. And then we go to the chart for that box, and then we come back to you to let you know this is the median income for this area. This is what they qualify for. And it's done that way. Obviously, the lending institution is critical to making this possible.
So this is not something you can just Google. You do need to work with an actual professional.
Absolutely. And there is required training that each of us has to go to be eligible to utilize this program.
That was my next question. I was like, don't you have to be certified somehow to be one of these lenders?
Yes, you absolutely do have to be certified in the program.
So what was that process like? How did you get so lucky to be one of these certified professionals?
Well, you have to request that you'd like to be eligible, and then you have to take the course, and assuming that you pass it and go through the certification, you're granted an approval to utilize the product.
That sounds rather tedious, honestly.
It's not as tedious as you might think. And remember, lending to us is an everyday event, so we're rather comfortable with it. I think it's more a matter of getting an understanding or learning to understand how to categorize and where to find the charts that you need to know what eligibility requirements exist in that box.
Well, I mean, you do speak this language every day. So for you, I'm sure it's just like waking up and yawning. But that's fascinating for the rest of us.
Mm-hmm. Yes.
So I work with a lot of investors, and I try to show people, especially when they're newer investors getting started, how they can use programs like this in conjunction with other investment strategies that I leverage in my business. One of them is that when people are looking to acquire their first home, or really in this specific example, any property, we talk about how to build a family legacy, and a lot of that comes from how to use wealth intergenerationally. Most people are not aware of, you can actually get a gift from a family member of, I believe it's now $16,000. Do not quote me. I'm not a lawyer. I'm not an accountant. I do not pretend to be one. But you can get a gift of up to a certain amount. I believe it's 16,000 something now.
It's 17, but okay, go ahead.
It went up. I knew it was something. See, I'd rather be conservative. See, I knew that somewhere. So it's $17,000 that they can get from a loved one that is not a taxable event. unless it goes over that threshold. And they can use those funds to get into a home. Are they able to do things like getting a gift from a family member in that amount? Are they able to leverage that gift and this program at the same time?
Absolutely. The program allows you to have a gift from an immediate family member. There are guidelines relative to who's able to provide a gift. Often they use the terminology family member. So yes, and the family member can provide as much as they want. Now, if there is more money provided in the form of a gift than is needed, the money has to go back. It can't just be taken.
Oh, it can't be like just because that would put the home underwater in that connection.
Well, no, it would actually get it on the closing statement. There can't be money going back to the consumer. It has to go back to the donor.
I see.
Right.
I see.
And everybody who participates in this program is required to take a course. It's an educational course that they have to take, and it basically just schools you on home ownership and the responsibilities of home ownership.
How long does that course take typically?
You can likely fulfill it over the phone and or a Zoom call within an hour or so. There are various different organizations that will hold the training for each borrower, and the borrower takes that training and then moves forward from there. And we have a list of all of those who are offering that.
That is really interesting, that you can be prepared to be a homeowner within an hour. I found that to be a little more lengthy in reality for me, but hey.
Well, I think it's a matter of discussing some of the trials and tribulations of home ownership so that they're hoping to set people up to succeed and not fail in their ability and desire to own a home.
That is wonderful, actually. That's wonderful that there are organizations out there to do that, which is great.
Agreed.
So are you able to use this program more than once, or is this a once and done thing?
You can only use it one time. You cannot repeatedly use it.
So a smart way to use this would be if you are getting into the housing market and you are a hometown hero, for example, doing things like a home hack where you go and you get a multifamily, like a duplex, a triplex, or a quadplex. That would actually be something to really benefit, because you can actually, those are still considered residential properties. If I'm not mistaken, this program can be used towards those multifamily up to quadplex.
But you have to occupy one of the units.
As long as you're living in one of the units. Okay. So that's great. So if you're actually able to get one of these properties, you're able to get the down payment assistance based on your qualifications and your zip code for that multifamily dwelling. Then you really can have not only gotten into that property with with very little money out of pocket, if any, but then you can actually have the rest of the property, the rest of the tenants paying down your mortgage faster and creating generational wealth.
In theory, yes, sure.
Ooh, you mean all we need is a strategy to put this in place?
Now, when I shared with you earlier that you could use another alternative program, like Florida has what's called the SHIP program as well. And the SHIP program is a grant, but it has a period of time that if you don't stay in the property for that length of time, you have to pay it back. Those additional programs have to be willing to subordinate to a third lien, because remember, your primary mortgage would take first lien. This program would take second lien. And if you're combining it with another program, they have to be willing to take third lien position. Not everybody's going to be willing to do that. So it may be that you may not find eligibility in using an alternative program. And that's why I left you with it's possible, but it's only possible if that other program is willing to take third position. So it would likely be on a case-by-case basis, and we'd have to find out if they're open to it.
How would you recommend someone going about talking to their lender about this program? If we have a new homeowner that's curious about it, how would you recommend they come to you and say, hey, Tony, tell me about this. How do I get started?
Well, I think the most obvious answer to that question is we would send them a link, which is an application. They would complete it. We would then evaluate their profile to make sure that if there's anything specific they need to do to be better prepared for this program, we have time to prepare them for it. And Then we'd ask them to sort of narrow down the areas where they want to go, so we could go to the charts and say, okay, if you go in this area, this is the median income, et cetera, et cetera. And then at least they have a better understanding as to what is going to be required based on the area in which they expect to buy.
Well, that is very good news for all of us to actually just, hey, I would just say, reach out to us. We'll send you over to Tony and he will take care of you from there. He is amazing at what he does. So Tony, you want to take a second to talk a little bit about Premier Mortgage Associates. When did you guys get started?
Well, Premier Mortgage Associates is a fairly new name for us. We have been in existence and in business since 1996, but we were U.S. mortgage of every single state. And it became a compliance nightmare, Jacob, honestly, to manage 48 different websites. So as of, I think, October last year, we went out to each state and asked if this DBA was available, which is Premier Mortgage Associates. Once we got approval and acceptance from the states, then we went ahead and changed our DBA to Premier Mortgage Associates. So now our marketing department only has to manage one website instead of 48 websites.
That's a lot of work. I mean, way to dream big.
Yes.
And didn't you start this when you were one of...
I started it 20 some odd years ago. Yes.
Lord. Well, you wouldn't look it, honey. You look great. And great work. That's very ambitious. I love that you're in 48 states?
We are in 48 states.
Well, who are the two that you're not in? You know what? We don't care. They're not important. They're the two that
Vermont and Hawaii. That's it.
Well, then we'll work around those two. Sorry, if you're on the mainland, except for Vermont, you're good to go. So you reach out to Tony. He can give you all the answers you have for lending, for mortgages. And we're so glad you took the time to speak with us today, Tony. It's been a delight actually getting the chance to spend this time with you.
I'm happy to be of service to you.
Well, if you guys have any other questions, please reach out to me. You can reach me at jacob@jacobreid.com. That is JACOB@JACOBREIDE.com. Or Tony, how can they reach you?
They're welcome to reach me at tony@premiermtg.com. And my cell phone is always available, and that's 954-328-7662.
And you can also reach out to me, Jacob, your favorite South Florida realtor, Sailing Sunshine. My number is 954-406-1800, and I'm with Balustrade Real Estate. It's been such a delight speaking with you today, Tony. I know you've got to go, but this has been so great. And thank you for answering some of our questions about this amazing Florida-based lending program.
My pleasure. I wish you a great day.
Thank you so much.